Welcome back to BrainBoost Expanding Minds with Knowledge, where we break down the latest global developments in a way that makes sense. Snippets of the importance of news that matters under 10 minutes. Today, we're diving into a major economic shakeup. New tariffs imposed by the United States on steel and aluminum, and the response from international markets. What does this mean for businesses, consumers, and global trade? Let's get into it. As of this Wednesday, the United States has officially implemented a 25% tariff on steel and aluminum imports. The move, aimed at boosting domestic production, has been met with swift reactions from trading partners, particularly Canada and the European Union.
European Commission leaders have already announced countermeasures, imposing their own tariffs on $28 billion worth of United States goods.
Meanwhile, Canadian officials have voiced strong opposition, with concerns about rising prices and economic impact.
The tariffs have sent shockwaves through global trade relations, raising fears of an escalating trade war. But how does this actually affect everyday life? Well, tariffs on imported metals mean that manufacturers will likely face higher costs. That could lead to price increases on everything from cars and appliances to drink cans and home construction. For consumers, this could mean paying more for essential goods, while businesses might struggle to stay competitive. The biggest concern here is that these tariffs will push up production costs, and companies will pass those costs on to consumers. Additionally, international retaliation could further disrupt supply chains, making it harder and more expensive for businesses to obtain materials. This could also have broader economic implications, affecting employment and investment decisions across multiple industries. Wall Street is already feeling the pressure. The Dow Jones and S&P 500 have both seen significant drops, and key industries like automotive and manufacturing are reacting cautiously. Tesla, Ford, and General Motors have all experienced stock declines, with some analysts warning that prolonged trade disputes could increase the risk of an economic slowdown. And it's not just the United States seeing market shifts. European and Asian markets have also been affected, with investors wary of potential long-term impacts on international trade. In China, major steel exporters are reassessing their strategies, while in Germany, auto manufacturers are bracing for supply chain disruptions. The ripple effect of these tariffs is being felt across the world. So, what happens now? Canadian officials are set to meet with United States leaders in Washington to discuss trade relations. At the same time, businesses and policymakers are closely watching for further tariff developments. The outcome of these negotiations could determine whether tensions ease or if retaliatory measures escalate further. Meanwhile, trade experts are debating whether these policies will actually benefit United States industry in the long run, or if they'll lead to more economic challenges. Some argue that protecting domestic manufacturers could create jobs and strengthen local industries, while others warn that global retaliation could result in economic instability, higher costs, and strained diplomatic relationships. The stakes are high, and the coming months will be critical in shaping the future of international trade. That's where things stand right now, but this situation is evolving quickly. What do you think? Will these tariffs strengthen domestic industry, or will the global response create bigger economic risks? Let us know your thoughts in the comments. And as always, don't forget to like and subscribe, and hit that notification bell so you don't miss our next update. Thanks for watching, and we'll see you next time on BrainBoost.